I got here. I got the green light. I can fund my policy. I can fund my family bank. But they never take that step, the actual putting the money into a system that they control. What is that missed opportunity for them? I didn't follow law number one. I didn't pay myself first. I didn't follow law number two. I spent more than I made, right? So if someone who doesn't have the funds available to start the system, that didn't build the right habits, but still wants to lock in that insurability, what do we do for them? So in this episode of WealthWise Banking, Jason and I wanted to come together and talk about a common misconception out there that mostly, hey, I got approved, I'm done. But that truth is, that's just the beginning. That's just the green light. It's the engine doesn't actually start until you fund the system and start living the principles that Nelson Nash's teach. So with that, Jason, welcome. Good
Jeremy,
seeing you again.
thank you. Yeah, it's amazing seeing you again, my friend, as well. And this will be a fun one because we talk about this, right? We bring things to these episodes that we experience on a daily basis. And a lot of people think that going through the application process, underwriting to get approved for one of these policies is the journey. Like that's it. I get approved and I fund it or I don't fund it, but I get approved and now I'm ready to go. I'm banking. And
yeah. So why is it dangerous for people to think that? Like for people to think that the finish line is the approval?
Yeah, that's a great question. I mean, the finish line is a reason to celebrate because not everyone gets approved, but it's not the finish line. It is not the end of the marathon. It is literally the first step of the first mile of the marathon of the 26.2 miles. Like you still have the whole, wherever you are in your journey, whether you're a halftime, third quarter, second quarter, wherever you are when you're getting started, you're just starting the marathon with the first step because banking is a verb. Let me repeat that. Banking is a verb. So the approval is the first part of you taking action to actually take back control of your life with guarantees.
Mm-hmm. Yeah, I couldn't say it better myself. You know, when you start the process of banking, you actually have to follow through with banking, right? So, hey, I've been approved. And again, this is kind of hard for some people to understand or maybe to hear, but these policies and the way that they're designed, they're a privilege. They're not a right. Like it's not something you just go buy off the shelf. There's a whole reason that Jason and I built this podcast. It's to help educate and train and mentor you to actually implement the process of banking in your life. There's a pre-approval for that. Once you go through underwriting, it is a time to celebrate. Like you're part of the club. You become a fractional owner of that carrier. But now you actually have to implement what it is that you've been learning across this entire process. And it's another reason that we put together the podcast. We are here with you. Like our journey with you doesn't stop at approval either. We continue that journey with you. Like I still touch base with members who've funded their policy a year or two ago. Hey, Jeremy, I was thinking about doing this. I was thinking about doing that. How would you, is now a good time to start another branch of my family bank? Like we have those dialogues. We have those discussions. It is a time to celebrate, but like you said, we're just getting started.
Yeah, and if you're freezing, if you got that approval and you froze and you didn't follow through, the question to ask yourself is why? What were you scared of? Why wasn't it communicated? You know, change is going to happen. Oh, I blew it. I could have asked Jeremy again. He could have been 2 for 2 on knowing that the one thing that's constant in life is in fact change. For all you listeners that listen to us, and thank you for doing so. And please spread the word. Like if you haven't already told your friends and everyone else, what a blessing you would be by just sharing this simple podcast with these two simple gentlemen who heard something, learned something, and said, hold up, that's too good to be true. You can't do that. And now we've taken it to the point where that we have a podcast, we have shared partnerships, and a vision to disrupt financial illiteracy in this country and doing it one family at a time. So what are we talking about today? We're talking about how getting approved is not the finish line. It's just the beginning. And now once you put your policy in force, meaning you funded it, you connected your bank account to that mutually owned dividend paying whole life company, what happens next? Jeremy's already talked about how he is still mentoring and guiding and being a strategist with folks who have done this for years, 2 years, 3 years, and on. And he's coming back together and they need to expand their system, or they want to know, is it time to expand my system? Or, hey, we have a new addition to our family. Do we need to expand it? Because the truth is if that is just the start line, the first step in the marathon, then there has to be logically multiple steps of the journey of banking.
Yeah. And here's a question for you. What are some of the biggest missed opportunities for people who stop at approval? For the folks who never fully engage? Like, because I go through it, I've had folks who've started the process, they go through underwriting, and then it feels that maybe there's analysis paralysis. Like, hey, I got here, I got the green light, I can fund my policy, I can fund my family bank, but they never take that step, the actual putting the money into a system that they control. What is that missed opportunity for them?
Mm. It's everything. I've seen people, and thank you for the question. I've seen people who have missed the opportunity. We've had a few folks actually pass away during underwriting in the last year and never even have the opportunity to start. So imagine that. I've had people who have surrendered their policies and come back to me when they finally got it after buying boats and cars and toys. Like, this is a conversation I had a year ago. I remember it clearly because he came back and he had to put policies on his young children and he couldn't get insured anymore because he was diagnosed with cancer a year ago. And he'll survive, but he's not going to be insurable for a while. And so you might miss the opportunity to be insured. You might miss the opportunity to participate, like Nelson would say. Nelson would say, if you asked him, what's the biggest risk in all this? Not participating.
Yeah, I've seen. I actually had a woman go through underwriting like right now, yesterday, Jason. Yesterday, I had to share the bad news that her doctor that just came back and said, "Hey, you have breast cancer." That came back a month ago, made her uninsurable,
Mm.
and that was a terrible, thing to have to say. Like she knew that she had breast cancer. Clearly, what she didn't know is that it was too late to get life insurance. And just from the life insurance part of the view, like that perspective, not the banking perspective, right? Because again, the chassis, the vehicle we use to implement banking is a properly structured whole life insurance policy. She wanted it for the death benefit. Like she was actually more inclined of using the death benefit than she was the cash value. And now she was being denied that. So for her, it was a double whammy.
Wow, my heart goes out to her in that news. And I had a similar conversation where the woman wasn't approved, and the doctor, and they just said, the underwriter said, hey, if she goes and gets this clear blood screen and gets a clear bill of health based on that, then yeah, we'll reconsider. We're not even saying she's denied. We're just saying, hey, there's a problem. There's a problem with your health, and you need to take care of it. And when I talked to her, her reaction was, I hope it's changed since then, but it was more like, yeah, so they're not gonna reconsider me. There's no wiggle room. That was her words. There's no wiggle room with me not being approved, that they might reconsider, even because my doctor said she wasn't really worried about it, even though they think I probably have sleep apnea, and I'm not getting any sleep. That my abnormal blood count. I'm like, I don't think that's what your doctor was saying. So Jeremy just asked me, like, what was the risk of getting approved and not doing something? It's not being able to get approved later or having something change so drastically, because we always talk about it. Changes are coming, good and bad, blessings and lessons, even if you're prepared or not. So if you want a better way to protect your family, to create legacy, to have control, then when you're approved, even if you've got to adjust what you were approved for because something has changed, make sure you're having that conversation. Just don't give up because the plan changed.
Yeah, and to that effect, I want to give kind of this approach that I've been implementing with a couple of our members. There's the idea of I want to be lock in my insurability. I want to make sure I at least have a legacy value that I can leave to my family in case something terrible happens to me. But I don't have the funds. Jason, to your point, I didn't follow law number one. I didn't pay myself first. I didn't follow the law number two. I spent more than I made, right? So if someone who doesn't have the funds available to start the system, that didn't build the right habits, but still wants to lock in that insurability, what do we do for them? Well, we start with a convertible term policy. That policy, we run it for 10, 15, 20 years, right? The length of the term. We get you a death benefit at a very low cost of insurance. That ensures that if something ever happens to you over the next 10, 15, 20 years, we can still convert it into an infinite banking policy, a high cash value policy, or a policy that we maximize death benefit. There are certain designs that we can do. The most important step, though, is getting insured. And by locking in the low cost, this is the point where I know we talk a lot about whole life, but this is the power of actually having a term insurance actually can help you, because you can lock in insurability at a lower cost with the death benefit And now it doesn't matter. We had an interview with Jared Adams, airline pilot, who ended up having a heart issue. He
Hmm.
can still get IBC policies because he had the term, right? He had the term insurance. And if you want to hear something like talk about the importance of having some sort of policy in place, go listen to the interview right after this. Go listen to the interview with Jared Adams and understand the importance of at least having something. From there, Jason and I can re-engineer it into an actual banking policy because you took the steps. You took the steps that you're proactive to go through underwriting. You got to the race.
Mm.
Like you showed up at the start line. Now we can actually begin the race together.
And that's such a great value add to anyone listening. Like, go listen to people who actually don't listen to us. Don't believe anything we're telling you. Honestly, like, we want you to think for yourself. We're not here. Jeremy and I didn't know each other a few years ago. We got here because we started asking very, very similar questions. And it led us to digging deeper into what we maybe weren't doing optimally in our financial life and how could we repair that. And that's the journey we're sharing. So we're telling you, like, when you get approved, another person, Jeremy, like you talked about the convertible term being such a strong play. If something changes or the person wasn't paying themselves first, but they still want to make sure they had that insurance. Maybe they're an entrepreneur, like a lot of our members are, right? I had someone who's young, the father-in-law was practicing this and said, hey, you got to get this. And I told you this story, Jeremy. So he got approved for $1,000 a month with a $20,000 dump. And he came back and he's like, Jason, we're buying a house. I'm not real sure about my new job. It's going really well, but I don't know how much longer they're going to need a tech like me doing this. And so I was like, all right, well, what's manageable for you? What's meaningful? We changed the premium deposit down to $500 a month. But what we did is once he put that in force or started that and said, hey, I want this to be what I want to do for my banking. I want to lock in the rest of the insurability I was approved for now. And we ended up doing a 20-year convertible term that was, for him, it was less than $600 a year to lock that in. So now if something does change, like somebody's like the woman that just had breast cancer a month ago, or the woman with the blood problem, or someone that just has something happen in their life, a change that they now can't get approved. Maybe they had a bankruptcy, right? That would keep you from getting approved for a couple of years. So change is always coming. When you're approved, it's a privilege because 11 or 12% of people do not get approved.
Yeah, it's something that you have to qualify for. And just like every major race, think about it. Think about the Boston Marathon. You have to qualify for some of these races. And when you're in the practice of banking, this is a major race that you have to qualify for the race. You can't
I
get
like
started.
that a lot.
Yeah, you can't get started without qualification. And that's how this all begins, is go through the process of qualifying for the race. And then when you're ready to race, Jason and I will be there. We'll be your support staff throughout the entire process. And guess what? When you finish the race, we're going to be there too.
We're going to be there too. We're going to ask you what the next race is because there's different levels of being a banker. There's different races that you may want to do, you may not want to do. Maybe, you start with a mini sprint triathlon, and that is your saving part of your banking system. That's step one. And then Jeremy and I are there to help you get your medal. We give you a high five. Now you're saving, paying yourself first. We're pumped up. And right in that moment when you're like, yeah, I could do anything, you're like, yeah, I think I could do an Olympic distance race. And so now we got you signed up for an Olympic distance race, Jeremy. And that's when you're going to start recapturing that interest that's leaving your family, making the purchases, keeping the interest in your family. It's a much longer race. It takes a little bit more training, not much more thought really, but it takes a different level of just the saver.
Yeah. What's interesting about the entire race analogy here, Jason, is at no point are we actually running the race for you. Like you're the one that's actually participating in the race. We're just the coach. We're the guide. We've done this. Like I've ran the race. Jason's ran the race. We're still running different races. So we have the expertise to help train you, to mentor you, to get you get you to the starting line, help you run this race, run the next race. But you're the one that's actually in the race. You're in the financial race, the race of life.
The race of life, which is in my life is an Ironman, and maybe someday it'll be something beyond that. But so now, Jeremy, this person has crossed the finish line of their first and maybe their second Olympic distance race. Same thing. We're pumped up. They're pumped up. They've got the coolest gear where they finance through their banking system because they started paying themselves first. So they got the cool helmets and gear and the racing stuff. They've got good nutritionists. on board now and their health is getting better. They're getting faster. They're getting more competitive. And they're like, Jeremy, Jason, what's next? Like, well, you know what? You're ready to multiply. You're ready for your half Ironman. You're ready to go in and put 70.3 miles in, average probably 5-6 hour time or more. And go out and do that race and prepare for that, because now you're going to build this back up, that opportunity fund, you're going to put it to work. And that's kind of the third level of banking. So I know I'm mixing the analogies, but we got first, second, and third level, all with a race analogy. And every step of the way, we're here to support and to guide and say, hey, we've done that. We'll show you how it is. This is what we've done. This is what we've seen other people do. It's not as complicated as we think. It's very simple. It's taking one step, and then taking a second step, and then taking a third step, and just having the faith, the courage, and the belief that it can work for you.
Yeah, I'll say that selfishly, the best part about what we do, Jason, is we get to train other financial athletes. So to your point, we've seen what works for other people and how they get to use it and being a part of the community. And the more you're around the campfire, the more you're around with other people, you'll figure out what strategies work best for you, what races you want to participate in, right? Everyone that's around here in our community, they talk to each other. And what works for me, maybe it does work for you, but you won't know unless you ask, or at least you learn. And that's the whole reason of the podcast. The whole reason of us putting this community together is to bring together like-minded people, folks who are just tired of the system that put them exactly where they are today. If you want change in your life, ask yourself, do I want to keep repeating these habits that got me where I am, or do I need to institute a new habit? On our last podcast, we talked, it was 60-something days to institute a new habit, a new 60-day financial habit that could change the rest of your life. Think about that. So if you're not happy with where you are and you want to change something, you have to start with changing somewhere, right? Hey, Jason, what's the one constant in life?
Jeremy, I think death and taxes? No, that's not it.
It's definitely death and taxes. It is. Yes. No, it's change.
It's change. It's change. Yes. And so as long as you're not driving, I want you to close your eyes. I want you to imagine if you have financial stress, if you have financial worries, if you're worried about how are you going to, take your family on the next vacation, make the next payment, maybe make the next investment. How are you going to retire? Like, there's just stress all around you in your financial life. And you think, man, I think I'm just going to keep doing the same thing I'm doing now. And then I'm going to keep praying. I'm going to keep hoping. I'm going to keep playing in the system. And then I'm going to fast forward a year and I'm going to be right here a year older. Maybe now I haven't even got on the race. So I'm not in very good shape. Maybe I've stress eaten Oreos before bed every night, a couple Oreos. And now I'm feeling horrible because I've gained weight. I'm unhealthy. And I'm still stressed. That's where you could end up. Not you guys, but the people listening that aren't taking action, that aren't wanting to start the race and put one foot in front of the other. You don't have to start with a triathlon. You can go out and run a 5K. You go out and run a mile. You could go out and do anything, but it starts with just taking action. And that's really, I think, the core of our message on every episode.
I'll invite you one step further. If you want to race, just put your shoes on. Just start with lacing up. And the part of that lacing up in our journey is call Jason, call Jeremy, just make the appointment. Let's just see if it's a good fit. Because again, this isn't a good fit for everyone. And I'll be honest with you, I'll tell you right off the bat if this is going to be a good fit for you. Because I don't want you getting involved in a race that you have no business. It's not that you don't have any business of running the race, it's that you don't have the right habits to finish the race. And I don't want to coach someone who doesn't actually want to be coached. Like that's just full transparency. I won't work with you if you don't want to work and help yourself.
I love that. And we're here for you. If you feel like you're someone that wants to be coached, that you have that drive and that energy to learn, you're curious, and you understand if you don't know it, you just don't know it yet. We're told that constantly by our chief master. Hey, you guys did stuff today. You did fighting styles and sparring. I know we're changing from racing to sparring, but you're hanging out with us. We like to do athletic stuff, but it's all based in, hey, you just don't know it yet.
Yeah.
It's uncomfortable because you haven't done it yet. And so if you have that discomfort, but you want a different future and you believe you can do this, schedule a call with us. Have that strategy meeting. come prepared with what's coming in, what's going out, what are you paying yourself, where are you storing it, what are you doing, and what are your goals? And we'll help you tie today to your future 10 years from now and then generations to come by changing the one thing in your life and really taking that action step.
Yeah. And that one thing is banking. It literally just comes right back to that, doesn't it?
It does. It does. We have so much fun talking about stuff, but in the end of the day, it is seriously boring. All we're trying to teach you is how you can have your own specially engineered. And I will ask you a hard question, Jeremy, and I'm going to give it away here because I'm going to ask you, what are you going to name your bank? And people freak out about that. You think people freak out about, having premiums and what's going to happen in the future? When you ask them their bank name, they're like, oh my God, I get to name it. I'm like, why wouldn't you? It's your bank. Why wouldn't you name your bank? Mine's a Sipple family bank, not that creative, but some people have creative names for their banks. Actually, Jeremy, do you have a name for your bank?
I don't have a name for my system. No. I just collectively.
Now you're on the spot. So what is your name?
Yeah.
You have 30 seconds. We're at the end. So what is the name of your bank? Everyone wants to know.
I'm not going to answer it because I think that part of my family bank, I need to have that conversation with my wife because we do collectively have a series of policies, and it'd be fun to have her get into the naming convention as well.
Ooh, I like that. So he is passing it on to the wife, and on the call, I would still tell him, gun to your head, have to make a decision. What is the name of your bank? All the listeners already have the name of their bank in their head. And by the way, it's your bank because guess what? You can change the name.
Mm-hmm.
What's the name of your bank?
It's going to be the Huggins Legacy Bank.
That's it. And everyone knows that you're already in banking.
You're just not the banker yet.
Be blessed. Have fun. What is the name of your bank? Schedule a call with us. We'll see you in the next episode.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.